everybody. Hope everybody's doing well today and enjoying their morning so far. Let's get to Tom Gentile in 5, 4, 3, 2.
Hey everybody, good morning. Happy Wednesday, December 1st, 2021 to you. I'm Tom Gentile. This is the opening bell here with Power Profit Trades. Glad to have you guys in the house with me today. Hey, what happened to Bitcoin yesterday? That's probably the biggest question and the one I want to start out with. We're going to talk about crypto news. We're going to talk about some crypto updates, but I'm going to reverse course. We're going to start with cryptocurrency this morning. Also, I want to get into looking at high volume and high open interest. And of course, you know what we do on Hump Day here. We talk about rolling tide. And yesterday we talked about rolling the tide. Man, that was a quick trade. I'm going to revisit that one, but we're going to talk about a different way to roll the tide. We're going to roll the tide back out today. All right. Hey, Joseph Medalis, guess what, buddy? Did you hear the news? Did you hear the news about yourself on Monday? Please tell me you did. And while I'm waiting for Joseph to let me, Joe has no idea. Ryan, did you know that Joe won a trip to my house in New Zealand and he has no idea? He has no idea he won.
Oh, that sounds like a great thing to wake up to, right?
I'm telling you, this dude's got to be like, what? Nobody told me. That's right, Joe. You actually were the fourth winner. I can't believe it. He's live. He's here, and he skipped Monday.
That's
and he
awesome.
has no idea. I could have snatched that right back from him and gave it to somebody else.
Could have given it to me.
Congratulations, Joe. I cannot believe you had no idea you won a week at my house in New Zealand. You and Crypto Bunny, Texar Joe, and John from Florida. All four of you are going to each have a week in the house. We'll get you the details here soon. What we're kind of waiting on right now is the changes that they're doing over there as far as letting people in the country. It looks like April 30th is going to be the first time to get in. But yeah, you got it this year. You got it, and I'll get you the dates. But boy, I gotta say, regardless of the fact of whether New Zealand's actually open for business or not to anybody but themselves, we're seeing an uptick, at least in resort in rentals in Airbnbs. I'm seeing it at my place, and so we'll get you that info, Joe. Because you need to be here, guy. This is exactly what happens when you miss this program right here. Hey, good morning to all my Monday Morning Live members. Good morning to the YouTube community. Glad to be streaming to you for another day here, this Hump Day Wednesday. So give me some love in the chat. Let me know you're here. Let's go ahead and get started. We're going to talk again about what happened in cryptocurrency. Number 2, high volume, high open interest. We're going to go back to the app that I give to everybody. And then, of course, we're going to talk about rolling in and out of the tide. We're going to talk about that as well. So anyway, hey, look, there's John from Florida. He's here too. He just heard that he won a week in New Zealand. Where the hell have you people been? I got people in here every single day listening to me, and they're wanting to know, how do I get a week in your house? Well, we'll talk about that a little bit later, guys. We went ahead and gave away an entire month of trips to New Zealand in 1 week intervals. So I'm probably going to be bringing that back again. But for those of you that won the drawing out of our microcurrency group, congratulations. We'll get you more information on that later. Hey, let's talk about some winning that all of us can take advantage of in here, okay? So to do that, we're going to start with BTC. And I want to talk about what happened with BTC. So I want to get into crypto news, and I want to get into some crypto updates here on this Wednesday, December 1st. Let's see. So I missed talking about the news yesterday because, this show, you look at it, guys, I got to tell you, I have a full 5 minutes to prepare for this show. Ryan knows. He's asking if I can do it in 4. So then, we're looking and I'm like, wow, I got a whole hour. And it's amazing how fast this hour gets behind us. So yesterday I wanted to mention the latest news. Obviously, we know about the Jack Dorsey step down. All right, Twitter CEO step down. A lot has come out about this. Now, here's a piece of news that a lot of you have overlooked. I know that it caught me by surprise when we found this out, but not that Jack Dorsey's stepping down, not that his CTO is going to replace him as the CEO. No, what is interesting is the last sentence down here that we put out to the community yesterday, and that was that Jack Dorsey is planning to build a decentralized Bitcoin exchange. All right, because guess what? He knows where the money is, and the money isn't in Twitter. And I completely agree with my cohorts that Twitter is looking like it's going to be more of a bearish opportunity than a bullish opportunity as these guys sit here and juggle around and try to figure out what to do with it. All right. So, a monetized platform, when you monetize a social platform, the number one rule that I believe is in making money with a social media platform is just let the First Amendment go. All right. Let it breathe. The right to free speech, because when you decide I'm not going to have anything political on, we're going to take everything that's political off, take the number one guy on Twitter, over the last 4 years, Trump, let's just remove him. Let's get rid of a big piece of I don't care whether you're Republican or Democrat. I don't care. Guys, we are all the Green Party. I'm talking about this kind of green, baby. That's the party we're a part of, because that's why you're here. You're not here to talk about the red and the blue. You're here to talk about the green. All right. And so you lose green as a social media platform when you start killing everything that helps you grow as a social media platform. All right, that was last year's news. But look at the news that came out today. That Twitter is going to be, they're just going to continue to pull out, the ability to use it as a free speech tool. Okay, yeah, I understand. There's some stuff that needs to be pulled. Profanity needs to be pulled, and the bots got to go. But when you take away a lot of people's right to free speech, they're just going to go somewhere else. And I completely agree with what Garrett was saying, where Twitter will end up being gobbled up by somebody in about a year after the stock makes some significant pullbacks. All right. Heck, I have a very good friend of mine that bought Twitter at 50 years ago, watched it fall down. What was it? Down to 10? It slowly made itself back up, and what do you know? It's trading back above 50. And, those of us who've traded something at 50 that goes to 10, the only thing we're concerned about is I just want to get back to 50 so I can get out of this junk. Got to 50, 60, 70, continue to go higher. And, of course, here we are setting up for that next big move back down to some single-digit number where a company much bigger than Twitter is going to absorb them, and then maybe they'll come back to monetizing. I guess Tom likes girly sunglasses. Does anybody in the room know what these glasses actually represent? All right. Does anybody know where they've seen these glasses before? I'm going to put that question to the crowd as we go into our next news highlight. More bank executives are on the move. All right. More bank executives are on the move. Hey, it's not the fact that one bank or two banks are starting to get really hot and heavy on crypto. JP Morgan, we were talking about just recently, but Citibank is announcing a crypto fund. That's another big feather in the cap of Bitcoin. All right. And so, you take a look at that. You take a look at the fact that Matt Zhang, who worked at Citi for 14 years, is going to head the structured products trading and solutions division. And we can see this becoming even more important for cryptocurrency. All right, back to the glasses. Bono, maybe. U2 Bono, maybe. Elvis Presley, not that I'm aware of. Elvis, blue light, blue blockers, no, blue blockers. Let me throw this out here to you guys so that I can slow this down. How many of you seen the movie Fight Club? Fight Club, okay? Oliver Peebles, that's what these glasses are. These are the Brad Pitt Fight Club titaniums. And they're fantastic when you are in a dark environment and you want to see better. I'm not in a dark environment. I got lights all over me. So taking these off, it's actually a good thing. Okay, let's get to our third piece. El Salvador is back in the news again. They are doubling down. They are buying more cryptocurrency. Last week's sell-off gave them the opportunity to go in and buy more cryptocurrency, about another $5 million worth. All right. They have $66 million in purchases on BTC. All right. Since starting their little test called Let's Utilize BTC as Another Currency Side by Side with Our Own. All right. Also, they are going to be doing something, constructing something called a Bitcoin city. All right. We'll find out more and more about what that ends up being like. But again, everything you've seen here in the news is all positive. Okay. All positive info for Bitcoin. So what happened to Bitcoin yesterday? Okay. You see all this positive info. We're coming into the 930 piece. I'm looking at BTC. I'm loving it. I'm looking at ETH. I saw one of you in here text me and said, hey, ETH, Ethereum is up 9%. I'm like, wow, we're getting really close to all-time highs again in Ethereum. And of course, I'm here for the hour. And I take off, got a little something I got to do, come on back, and I look at BTC and I'm like, what? What just happened? What just happened with BTC? And so what happened was Fed chair and the tapering. But was it really that big? Was it really that big a news? Because you know what? I got to put the red button on for this one. This was the last 24 hours of BTC. Okay, when you go back to Tuesday and you take it from Tuesday to Wednesday, midnight to midnight, here's what happened. Bitcoin had a really nice run up from 1 a.m. Tuesday morning all the way up until, what was it, about 10? That was about 10:15 in the morning when Bitcoin made its highs. Then Powell spoke, and then boom, we dropped it off. But did we go lower on the day? No, of course not. If I'm looking at this chart correctly, and I believe I am, I don't need Fight Club glasses to see what I see here. This was a higher low that happened. All right. Here's Wednesday at midnight. That was just a few hours ago. A higher low. Higher low, higher low, higher low. So when I hear people that come in that say, oh, stock market had a bad day and the Bitcoin had a bad day, and the only thing that went up yesterday was the VIX and lumber, they're not looking at the chart. They're not looking at the chart correctly. Anyone that said the Bitcoin had a bad day yesterday obviously wasn't looking at this chart. All they were doing was listening to what somebody else may have said. You know, that tell a story. All right. We have that in our family. When I want things to go out in a big way, I tell my brother-in-law, Daniel, because telling Daniel is like tell a Daniel telephone. We all have folks like that in our family or in our community. There's one person you can tell is the town crier that will bring your message and put it out in many, many ways. This guy's like bulk email to our family. So again, don't listen to what everybody else says. Let the chart tell you what's going on, all right? We were talking yesterday, we were talking about buy signals in Bitcoin. We were talking about buy signals in Doge. So let's take a look and see what's happened since yesterday, all right? So I'm going to go to the big chart first, all right, the real-time chart, and here's what we're looking at for today. All right, here's Wednesday right there off the bat. 1 a.m., we're trading around 57,000. That's pretty much where we covered yesterday. Again, and that was off the lows of yesterday. So coming into today, lows on BTC, 57,000. We're hitting 59 right now, folks. 59. Okay, now that's the futures markets. Take a couple $100 off, you get the cash price. But you get the idea. Look at all the move that happened from about 7:45, all right, into 9:15, into 9:30. Now the stock market is opened, and now Bitcoin is moving higher. All right, great. So, Ryan, I learned 3 things yesterday. You want to know what they are?
Absolutely, I do.
Okay, Apple is a bond. Okay, we talked about this. We were talking about this yesterday around the family dinner. All right, Apple is a bond because that's what we talk about around the family dinner. My wife can't stand it that my son and I just continually talk about the markets even though they're closed. But Apple's trading like a bond now. So when the market crashes, people are moving all their money into Apple. But here's another thing I learned. BTC is doing something that it has rarely done. And you know what that is? It is starting to move against the market. It's starting to move in its own fashion once again. Because yes, it moved. It had a little quick move down yesterday for all of about 15 minutes when Powell spoke. But then it turned. The market didn't turn yesterday. The market dropped into the day yesterday. By the way, I was buying at the close. We're going to talk about that by the end of the hour, right? Am I happy about that? Yeah, of course I'm happy about that. I bought at the close. I sold premium at the close. And it's tough. It's tough to do things that the crowd won't do. It's tough to go against the crowd. All right. So there you go. But this is a business, folks, where you don't want to do what everybody else is doing. You want to be trading more against the herd than with the herd, because we all know what happens to the herd at the end of the round. All right. They get corralled into the pen, and we know where they go after that. So Bitcoin, what's going on with Bitcoin other than this up 2.25% today? Well, let's pop on over and let's look at the chart. Here's BTC. We talked about this yesterday. We talked about this last week. All right. There is your 50% retracement. That's from the lows in September and the highs in November, right? We basically had a November where the back half of November, those last few weeks, we just saw the market move down, all right? 7 days a week, baby, 24 hours a day, holidays included. That's about a good 2 weeks worth of move right there from November 11th out to about the 25th. Then we move into Thanksgiving. And those who gave thanks to Bitcoin being up even huge, even though we had that move down, but being up huge for the month, those that looked and said, hey, 50% off the lows to the highs. And those that looked even a little bit farther down the road, and some of you were in this room, and I'm going to take you to the 150-day chart. Take a look at this. There's your low in July, all right? That's the low. I don't know if that's the low for the year, because if you go back to January, I believe we were even lower. But that was the significant pullback off the 63,000 mark that we hit in April. So you take that low, that was 723. You take the high, 67,549. Okay, that low was 29,795. You put those together and look at this pullback. This is the longer term pullback. What happened? 38% retracement on the long term, 50% retracement on the short term. And guess what we got? We got ourselves some very, very interesting, let's say it all together, at least double stack compression. All right, double stack compression going on right there in the 53 to 54,000 range. It's no wonder that Bitcoin is starting to pop. Let's look at Ethereum. ETH. I know, I'm sorry I sound like a broken record, guys, but how many times do I have to say it to make sure it sticks? Ethereum, long-term chart, all the way up. We didn't even get a 30% pullback or a 38% pullback on Ethereum on the long term. That just shows how strong Ethereum is. All right, forget the gas prices. And I'm not talking about fuel. I'm talking about the gas prices to exchange, buy, sell Ethereum. Okay, forget all that, because everybody else is. This is one of those markets where, guess what? Bad stocks go up, good stocks go down, and Ethereum is the strong currency when you take a look at the big ones. All right, so we have to look at not the 150-day chart. We got to look at that. Let's just go to the 100-day chart. That's going to take us into the lows that happened in September. Lows in September, 2760. Highs in September, same highs as the long-term chart, 4810. Where are we now? 4753. Let's take a look at those futures on ETH. All right, so if I'm using Thinkorswim just to show everybody //ETH and your futures contract for this crypto. 4827 was the high early this morning. We pulled back to 4,700. We're back up to 4807. Well, we just hit 4807 just here momentarily. But what you're seeing here is a knock. You know what's knocking? All-time highs are knocking. All-time highs are knocking on Ethereum right now. Are you going to answer the door? And so when I look at my long-terms on Ethereum, and I look at the long-term being around 9,000, and I look at the long-term on Bitcoin, I'm not talking about long-term. I'm talking about within the next 1 to 2 months. All right, 90,000 on BTC, 9,000 on Ethereum. These are some significantly higher numbers today or tomorrow than they are today. Okay, so again, we're talking about the investing side. What about the trading side, Tom? Okay, let's go take a look and see what a couple of the ones are that we've discussed here. First one I'm going to talk about is Doge. All right, Dogecoin. Dogecoin looks like it may have double bottomed down here around the 20-cent level as we're now trading above 21.5 cents. Where am I seeing Doge? Where's Doge trying to go to? That 31-cent level there. Okay, we took some stabs. We took a stab at 36. We took a stab at 34. If we were to follow that 36, 34, 32, all right, 32 stab is a great exit point for half of the Doge. Half of the Doge. Okay, we talked about Doge in here. We looked at Doge at 24. We had another signal at Doge at 20. So 22-ish. Looks like the average in on Doge. So if I'm looking to get out of half of this at a 50% profit, just to take some off the table, what's 50% of 22? 11. What's 22 plus 11? 33. This is simple math, folks. 33 cents. 33 cents is right up here near the stab. And so 33 cents is the area that I'm looking at. As far as starting to, if I were to unload some Doge, because again, I'm not a long-term holder of Doge. I'm not an investor in Doge. I'm a trader in Doge, and I'm a trader based on rules-based trading, pattern-based trading. Okay, that's Doge. Let's take a look at one more, and that is the low man on the pole. And what I mean by that is that, you know, I have high hopes for Cardano. I have high hopes for Cardano, but Cardano right now is starting to form a base down here at 153. Now, I look at Cardano in both a tradable asset and an investable asset. An investable asset because of the fundamentals of Cardano, but throw the fundamentals aside for a moment. A tradable asset because, again, we're looking at this two different ways. If I own it at 2, I want to get out of half of it at 4. If I own it at 150, I want to get out of half of it at 3. Got it? Then you hold the rest as the asset. So I'm dividing up my Cardano into two pieces, the investable piece and the tradable piece. I want to make sure that I have a plan, an exit plan to take my money off the table with Cardano. And pretty much every other coin past the top two, Bitcoin and Ethereum. Okay, I'll take some money off of Bitcoin and Ethereum when they hit my targets, my big targets. But as far as smaller coins, these altcoins, these microcurrency coins, we have areas where we want to take these off. We have exit points on our Cardanos, on our Doges, and on our other dozen or so open positions that we have right now on Microcurrency Trader. Okay, and those of you that are interested in looking at being part of the third wave of crypto, well, you've got the link right above the screen there in that big yellow banner at the top. All right, let's move on. Let's talk about the stock market here. So this morning, Monday Morning Live was covering some some stocks this morning. Let's take a look at some of them, and let's see what we have going on in the stock market. Now, these are all stocks that pretty much have the same thing in common, so let's kind of follow this common thread here, all right? These were the big stocks everyone was talking about. Allbirds. Okay. You know, when I saw Allbirds come public not too long ago, I remember Allbirds because I bought sneakers, all right? Athleisure shoes. I know sneakers is not the politically correct term now for something with a rubber sole on it. But I bought these things long ago when they had the New Zealand wool. What kind of wool was that? Starts with an M. I want to say I want to say Moderna wool, but it's not Moderna wool. Those of you that are wool experts can chime in and let me know. But I look at Allbirds now. I'm like, wow, this thing went from a small company. Monero wool. Thank you, Pop. Thank you, Winfred. Thank you, Nomad, Andy, and everybody else who's correcting me here. All right. So look at Allbirds. Isn't it something? You've got Allbirds here, which was a small company that is now trading. It's now a publicly traded firm. It now has stock options. You know what else it has? It has stock options that are pretty darn expensive as it's coming into earnings today. Let's just look and see how expensive. And I'm also going to tell you why I would not trade Allbirds, even though I wear Allbirds. I will not trade Allbirds at this time. So let's go to the option table. Okay, so the stock symbol is BIRD. Let's go look at BIRD. Bird. So the bird options that expire in about 17 days. Let's see what they look like going out. So a $17. This is a $19.24 stock. You know what's amazing? They are expecting a big jump one way or another after earnings. Let me show you exactly how option traders figure that out. It's a very, very complicated mathematical formula. Okay? I'm being sarcastic here. That's sarcasm, because all you're going to do is you just have to take the nearest at the money options, the nearest at the money calls, the nearest at the money puts, add them together, and that gives you a good idea of the range that option traders are expecting this to trade in. So what's the nearest at the money option? The 20s. The 20 calls, 205. The 20 puts, 268. So we're really looking at about a $4.70 move. Okay, $4.70 off a 1924. I mean, we're talking, they expect Allbirds to be in a 20% range, back and forth. A better than 20% range, 25% range after today's earnings. Okay? After today's earnings. So, there you go. All right? Now, why would I not trade this? I'll tell you why. Because outside of the fact that it's brand new, outside of the fact that the implied volatilities are sky high right now, we don't have a clear read on exactly what these guys are going to do going forward. I mean, think about this. It's a shoe company. And yeah, I mean, you know what? Some of you might say, well, Crocs was a shoe company, and look what it did. Yes, look what it did. It went up, and it came screaming back down. Now it's kind of moving higher again. But still, this is a crowded area. So it does not shock me in the least that they are expecting this particular stock to move substantially after today. I won't trade it also because I don't have a pattern for it. It's too new to have a pattern. So let's move forward. Let's take a look at AMBA. All right, umbrella. And now here's a pattern. All right, at least a technical pattern going high. But do you know what happened here with this pullback? We've seen some consolidation. Now, the other thing I see is take a look at the options implied volatility. Those 7 to 30-day options back at the beginning of November were trading down here around 50 to 60. Now they're trading at 120 to 130. The options are now worth twice what they were. They're getting twice as much for the time premium now as they were last month. Okay, let's see how much. Let's go over to the option table. AMBA. Let's take a look at AMBA. Some of you might be thinking, you know what, Tom? I know what you're talking about today. You're going to talk about selling puts, aren't you? And we need to just skip right ahead and sell the puts on AMBA. Well, I thought about that. And then I saw this. I saw that 179.52. All right. And then I saw this. I saw, okay, the 177 halves, they're 1010 by 1280. All right, so, there's a little bit of spread between here, but you know me. I like to look at those probability cones. I like to go in and find something that's worth buying. And I'm already thinking, well, where is AMBA? Where's the cone? Is the cone down around 150? 150 sounds good. All right. The December 3rd 150 puts are 235 by 275. The thing is you're not going to get a whole lot of value here. And so I thought, well, what if we sold those third Friday options? I've heard Tom say that the third Friday options have a lot of liquidity on average. All right, where's those 150s at now? Ugh, look at that, 330 by 6. That's terrible. That's absolutely terrible in terms of slippage. Okay? When you have a bid at 330 and you have an offer at 6, all right, I don't need to look over here where there was only 4 contracts that traded yesterday. I don't need to look over here where there's only 82 open interests to tell me that nobody's in this sandbox. So I want to be a small fish in a big pond. I do not want to be the biggest fish in that pond. And let me tell you, if you want to be the biggest fish in that pond, all you got to do is trade 5 contracts, and you just exceeded the total volume of yesterday, and you become the big fish. And if you like being a big fish, you want to feel good, that's great. But that might give you a feel good in the moment. You might not be feeling so good after you realize that you just bought something, and now to turn around and sell it, it might cost you double what you paid in an instant. Let's stay out of that game. Let's let somebody else do that. All right, so that takes us back to the rest of the stock charts we're seeing here. All right, is there anything on this list that looks like it might have some liquidity? Box? No. All right, yes, it has earnings coming out today. How about Globus Maritime? When you take a look and you see the options line going back and forth like this, you can't say, Tom, something's wrong with your software. It looks like a Geiger counter. It looks like this one's about to explode. No, what's happening here is there's such little liquidity that is pushing up and down the implied volatilities on literally a daily basis. When you go from 100 to 400 and back to 100, guess what? That is low liquidity. Let's move on. NTAP. All right. NetApp. Now we got something we can look at here. Let's take a look at NetApp. Let's take a look at the options on NetApp, and let's see NTAP. And what I want to do is I want to look at NetApp, and let's look at those D17 options for a moment, because we want to sell that high implied volatility. If the stock's trading over here at 88.88, what do the 75s look like? All right, here's the problem, guys. When we go out of the money on some of these stocks, look what happens to the liquidity. 40 cents by $1. That is absolutely terrible. 40 cents by $1. We're talking about if we sold it at the market and we bought it at the market, we'd be down more than double. You sell at 40 cents and you buy back at $1. That's a 60-cent loss. I don't want to play that game. So we have to move on. Okay? So guess what? There's absolutely nothing on this chart that I see that offers any kind of liquidity except maybe Salesforce. Okay, maybe Salesforce, which was trading in the 2s. All right, trading in the 2s is last earnings, and now we're trading up near $300 a share. 284.96 was yesterday's close. Where are we at today with CRM? Let's take a look and see. CRM, and we're seeing that this one is down even more today. All right, down even more today, and that's because their news already broke. Their earnings already broke. So guess what? We don't want to sell volatility, or we don't want to sell this on the breakdown. We want to sell this before the balloon pops. Is the balloon popping in ZS, in Zscaler? It might be, but there's no liquidity here. Is the balloon popping in DCI? The balloon might pop, but the volatility is terrible in this one right now. Patterson Companies, no, don't want to do that. RY, Royal Bank of Canada, had an account with Royal Bank of Canada, was terrible, don't want to do that either. How about Weber, W-E-B-R, Weber Corp? Well, look at that vol. That's way down here at the bottom. I'm not looking to sell a premium in Weber, and then we're back to Bird. So what does this tell me? It tells me we need to look outside of what's announcing earnings, either yesterday or today. All right, that's the important point that I want to bring across. All right, so and also the biggest point is stay out of the small pond. Where's the big pond? I'm going to show you where the big pond is. The big pond is in an area that I like to call the high volume and high open interest pond, which is something that's available here at tomsoptiontools.com. In fact, if you go to Google or you go to your Apple device, all right, go out there, use this nifty, I call this a $1,200 calculator, all right? But it also has apps that we can download. Download the app called Tom's Option Tools, all right? I don't care if you're a member or not. If you're a member, you can log right in and you might have access to more than just the morning report, because we offer access to these buttons for folks that are lifetime members of our services. But that morning report down there, that's free to everybody, all right? How do you get to that? Well, once you download the report or once you download the app, if you move through logging in, all right? If you have an account with us, you can log in, use the username and password. But if you don't, go down to the bottom of the app. That's this part down here. And it's going to say non-subscriber login. Log in there, all right? And then you got access to this morning report. What's the morning report? 6 different lists that I look at every single day. We talk about these lists here every single day. Today, we're going to talk about high volume and high open interest. Okay, so high volume, high open interest looks like this. Let's pop on over and take a look and see what that looks like. I have it on my chart as well. All right, here you go. Unusually high call and puts. We'll look at that. We looked at those yesterday. But highest open interest and highest volume. Right now, Ford is in the high open interest camp. The highest open interest coming into yesterday. Well, what option has the most attention by everybody? Well, it's the January 21st, 2022 20 calls. All right. They closed yesterday at a price tag of $1.08, and they have an open interest of over 195,000 shares. Uber checks in at number 2, EQT number 3, AT&T number 4, Apple number 5. Then you got AMC, CCJ, Bank of America, Planeteer, and Exxon rounding out the bottom 5. This top 10. These are the top 10 highest option open interest when you look at individual option strikes. Okay. Number 2, take a look at the highest option volume strikes. Okay, now this one gives us, remember the difference between volume and open interest. Open interest is the amount of contracts that are open right now that somebody has either long or short that they have not closed up yet. They actually have an open trade on. Highest volume is the actual trade itself that happened, okay? Now, the highest volume trade of yesterday was Apple, right? Because again, Apple is a bond. Apple's treated like a bond. And apparently, people were buying in this case, we're looking at the December, all right? December 10th, 165 calls. 111,000 contracts traded yesterday. Followed by CCJ, AT&T, Qualcomm, Uber, Bank of America. Schwab is on that list, DT, Exxon, and AMC. Do you realize that 8 out of those 10 are also stocks that also have options that are in the high open interest area? That, my friends, is being a small fish in a very, very big pond. Okay? Small fish in a big pond. That's what we see going on there with the likes of, and by the way, I can look down at the bottom and I can see AMC, AT&T, Uber, Apple, Bank of America, CCJ. They all have more than one light up right now. I mean, they're lighting up in different, in more than just these 2 categories, but they could also have a spot in the highest unusually high call option volume, like Qualcomm does. All right, they could be in the unusually high put option value, like Ford over here. Are they in the cheapest or most expensive? Maybe, but probably not. As you can see here, the most expensive USO is topping the list right now in terms of what we see for most expensive. Now, I'm going to utilize the most expensive list here in just a moment. Okay? And the reason why I want to use it in just a moment is yesterday we were talking about something here. And let me bring this up, and we're going to talk about this for the rest of the program, guys. I got about 20 minutes left here, and I want to make sure we spend these 20 minutes educating you, okay? So let's take a quick 5 minutes recapping, or even less, recapping yesterday. Yesterday, we talked about something called the tide rolls in, all right? This is kind of going in and sniping call options or sniping put options, all right, before everybody else finds out about them. Now, what I'm talking about is going in and grabbing something that's event driven and doing it before everybody else does it. What's up, Fred? And what you see here is going in and taking advantage of getting into something before mainstream media starts talking about it. All right, we discussed that yesterday, and we were actually looking at Stitch Fix as an example, because Stitch Fix, what we learned about Stitch Fix is that they're having trouble stitching the stock price up because it's been going down. And not only has it been going down, but it's been going down more often than not the week before earnings. All right. Did it 2 cycles ago? Did it 1 cycle ago? Did it 3 cycles ago? And it looks like it's been doing it now recently, because we looked at it when it was a $26.35 stock yesterday morning. And here's the other pattern we found. We found the price pattern going down, down, down. We found implied volatility, option premiums going up, up, up. What do you have when you see something that goes down a week before earnings, and you couple that with options time value going up into earnings? What I see is a pattern to the downside. Okay? I see a pattern to the downside. Okay? So, that's interesting. That means I want to be a put buyer. We talked about this yesterday. We talked about being a put buyer. In fact, I showed you an example of buying this put, and we were looking at, and I want you to follow along with me here, because the most important part of this lesson yesterday wasn't the stock price, it wasn't the NIV, it was looking at whens. When to buy, when to sell. When to buy was when everybody else, before everybody else started looking at the stock. Okay? Got earnings coming out, this was yesterday, 7 days. The earnings come out on 12/7. They're coming out after market close. That's the next earnings date. The win percentage meant looking over the last year following this. This was a 3-1 trading strategy. Now, we can go in and look at the Greeks. We see that 64% average IV change. That means, when we were looking at this chart, average jump up was around 64%. All right. We can look at the theta decay. We can get really, really technical in here, guys, but I'm probably going to lose several of you. So let's just get down to this. All right. Adding all of this stuff together, what we come up with is about a 30% return on average looking at this. So if I have a stock price if I have an option, it's at $2.79. And I think here, all right, roughly 280. So what's 28 cents? 28 cents is 10% of that. So you know what? This is where I got to go in. We can all do this together. All right. So this is, coming into yesterday morning, guys. 28 times 3. That's 84 cents. That's what the $1,200 calculator tells me. All right. 84 cents. What's 84 cents represent? 30% of the option price. Now, if I take the $1,200 calculator, all right, because I'm taking that 30% return on average, and I take 80 cents, and let's just add 280 onto that. So 80 cents plus 280 is around $3.60. All right, 355 to 360, depending on whether you're using debt 279 or 280. All right. Third chart coming. Here's what happened yesterday. We opened, we ticked back up. We were actually positive on Stitch Fix a little bit yesterday, which tells me that 279 price, that 279, 280 price was absolutely there. Okay. And here you go. Look what happened. Look at the high, $3.70, right? This thing went up 90 cents yesterday, which was better than a 30% return. So when you have something that's staring you in the face saying, hey, based on the pattern recognition here, this is average about a 30% return on the at-the-money options. We got the 30% return, game over, okay? Now, this doesn't happen all the time, folks. This is a rarity when you see a move that happens when you get that pop-up. It doesn't happen all the time in one day. But you had two things happen yesterday that pushed Stitch Fix to a day trade. You want to know what they were? Number one, the huge move down in the markets, which also pulled Stitch Fix down into the $24 area. And number two, we had a major increase in what's called implied volatility. All right. The fear factor gauge went way into the green yesterday. And so what that did was that gave you the ability to take a 1 week trade and turn it into a 1 day trade. Now, day trading is something I rarely do. Okay, that represents the least amount of my trading. But every once in a while, something's going to pop up that was a position trade, that was set up as a position trade and taken as a day trade. How do you take a gain like that? It's very easy. When you put your order in and you get filled, what's the next thing you need to do? No, you don't need to take a phone call from your friend or your spouse. No, you don't even have to take, you can't even take a bathroom break until you do this one step. You know what that one step is? Set your limit order. Tony's right. Put in your sell order. Set your exit. All right. Then you can pick up the phone and talk to your spouse. Then you can go to the bathroom. Then you can close the laptop and walk away for a few minutes or whatever it is you do. Okay. All right. Just saying. So let's move on. I've exhausted this 2 more minutes than I wanted to. So guys, what else can we do with the tide? We can roll out the tide. All right. Let's look at rolling out the tide. Rolling out the tide looks like this. All right. Statistical probabilities. Today, for the last 10 minutes or so, I want to talk statistical probabilities, and I want to see if there's a trade out there. All right. I see Intel made that 52% move. Nice. Intel got the pop today. Did I sell any Intel? Let me look and see. You know, my ADD is severely kicking in today, guys. I could say that I made back most of what I lost yesterday because, yes, I lose money too. It happens. You know, when you get a 600-point down day and then you get a 400-point up day, and whatever you lost yesterday, and a lot of that was open positions, my friends, all right, you make it back again, that's great. A lot of the stuff that I lost yesterday, in fact, I would venture to say that 95% of the losses that I had yesterday were on long-term stocks that I own. Most of the stuff that I lost, the little bit I lost was on options, and I started adding to those positions. And I'm looking at my option trades today. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 10 of them are up today. 2 of them are down. 2 of them are down today, but 10 are up. So I likey those numbers. I likey. All right. So moving on. If we're going to look at statistical probability, which is a lot of my trading, okay, a lot of my trading, what I look at is I want to step in and I want to sell that fear. And I'm not talking about selling stocks on the fear. I'm talking about selling option premium on the fear. All right, the tide rolled in yesterday. The tide gave us a great ability to go in and do some put selling. Now, interestingly enough, even with the 400-point move up today, that 400-point move up today, there's still some nerves. There's still some nerves that are kind of racking right now. So let's talk about how we do this. What I do is I look at what's called cash secured put selling. Okay. So we're out of microcurrency right now. Put that aside for a moment because that's one of the ways that I like to make money. Another way I like to make money is selling premium, expensive premium on first-class stocks. So we take that first-class stock. Last week we were talking about NVIDIA. And we were looking at that NVIDIA chart. We're looking at the buy zone. By the way, NVIDIA, what's going on with the NVIDIA stock chart? Let's take a look at it. NVDA is the symbol, NVDA, right? So, I mean, here's where we are. All right. So, yeah, we're basically up a little bit today on NVIDIA, but that's a $327 number you see there. Okay. When we were talking about it, it was trading at 310. When we were talking about it, we were talking about the buy zone being down here at 235. When we were talking about it, we were talking about selling those 235 puts. Guess what? Those 235 puts are a lot cheaper now than they were when we were talking about selling them. That is good. We want to sell high and buy low. That's the strategy, folks. Okay? So when we look at this and we go through and we spot the opportunity is in the cone. The opportunity tells us that we have a high statistical probability. I don't do these unless A, they're on first class stocks, and B, they have a 90% statistical probability or better at making money. Okay? John, my name's not Kenny. So the next thing we do, guys, is we go and we look at creating that alternative risk trade. There's those 235 puts. Right? Yeah, they were selling for $2.20. They're much cheaper now. But we can find stuff that by the way, this was one of the worst ones to do because there were so much better looking ones out there. And there are some really nice ones to look at today. So that, you know what we're going to do? We're going to look at today. We're going to see what's going on with this today. And so I thought what I'd do is take us back to potentially some big names and see where they are in terms of implied volatility. You know what the big names are? They're FAANG. You know what I was thinking about today? I was all ready to push the button on Metaverse because what was going to happen was Metaverse was going to change their symbol. And I knew that was going to cause confusion. And that was going to cause potentially a selling opportunity in those Metaverse puts. But then we find out recently that the symbol FB is being pushed back to Q1 of next year before they make the symbol change. So, can't do that one, but what can we do? Let's take a look and see what can we do. I'm going to pop up here. You know, we could look at AMBA, but I'm going to tell you right now, the options on MBMA are terrible. So, again, small fish, guys. Small fish, big pond. Let's look at some big ponds. AAPL. Is Apple a big pond? Apple is a big pond. You know what else is going on with Apple? Look at this. The 20 implied volatility. The options just a week and a half ago were trading at a 20. They're now trading at a 32. The options are 50% greater than they are. Okay, so we have to go out and look a little bit deeper. We got to go a little bit deeper out. If you think Apple's a bond, if you think Apple is a flight to safety, regardless of what this market does, then now's the time to look at potentially selling puts and creating a position in Apple. The question that we have to ask ourselves is, where do we want the position to be? All right, so let's go look at some options on Apple. AAPL. Now, I'm going to look at Apple, but I'm going to go out to the Jan 2021 options. The reason why is that we want to find something that's in that 60-day, that 60-day price range, because we want to sell something and actually bring some dollars back. All right, kind of set it and forget it. So let's do the set it and forget it with Apple, and let's see what Apple's selling for at 30% off. All right, let's see what the 30% off Black Friday sale looks like for Apple. Not very much, but you know what? You come down here and you start looking at the 150 puts. Again, where's the stock at? Stock's at 165. All right, how about the 140 puts for Apple? The 140 puts for Apple with Jan 2021. All right, if we were to sell one of those, what could we get for it? Could we get $1 for it? We could definitely put $1 in the price tag. Right? So what's $1 going to do for us? If I could sell this put right here, this 140 put for $1, then what this is going to do is it's going to allow me, and let's hit the risk graph on this. For $100, I am going to be obligated to buy the stock at 140. Okay, well, where's 140? 140, folks, looks like that low that occurred at the September, October range, right around that low. And I'm going to get paid $100 to buy 100 shares at 140. Now, high probability trade, you betcha. This particular option strategy has a 91% statistical probability of actually being profitable. The problem with it is you're making less than 1% on the trade. Okay? So how do you increase your trades? We go out and we find good stocks that have high implied volatility. All right? Maybe there's an event coming up that's pushing that stock up a little higher. Maybe it's an industry-wide event that's pushing this higher. So maybe we'll look at, instead of Apple, maybe we look at Ford. All right, maybe we look at Ford Motor Company. So pop on over. Let's look at Ford. And let's see what, because Ford's not $168, $165. Ford is trading where? 20, 19, trading around 19. Let's go take a look at Ford. Let's look at the Jan 21, 2022 options on Ford. Guess what? The 17s. Okay, so we can take ourselves out 20%. That's going to put us around the $15, let's say $16 mark. If you sold the 16 puts on Ford with January 2021, hey, you're only going to get about 39 cents. All right. But, and who's to say we can't go out and look at them farther out? But what we're doing, folks, is now this is a 2.5% return. All right. On something that has a probability of, of getting near 90% probability of profit. Because look what Ford's got to do. It's got to come all the way back down here to before the earnings came out. Before you end up grabbing the stock. How many of you in the room right now would love to own Ford at $16 a share? I bet you would. This is a way to do it and get paid. How viable is this strategy? I'm going to show you how viable it is right now because we do it every single week, all right, using something called Rocket Wealth. Rocket Wealth, and I'm just showing you the closed positions that we had over the last quarter, all right? Hey, 71% of the premium we've captured, all right, in the last 90 days. That's the first thing. 100% success, 100% winners. You see that? From August all the way to the end of November, we've got 100% success. These are the closed positions. We have open positions that look great too. I'm not going to share the open positions with the room because I have a lot of people in here that are not Rocket Wealth Initiative members. But if you want to be a Rocket Wealth Initiative member, then I'm sure Perrin or Billy or one of the fine folks here that are supporting me in the back of the room are going to put up some kind of a link to show you how you can be a Rocket Wealth Initiative member, right? So, and for those of you that are, where are my Rocket Wealth traders in the room right now? There's over 1,200 of you in the room. Where are my Rocket Wealth traders? Come on, give me a shout out. Those of you that are Rocket Wealth traders, because those of you that are Rocket Wealth traders, I'm talking to you now. So those of you that are Rocket Wealth traders that are also lifetime members, guess what you get access to? You get access to things like this. By the way, there's your number one stock. I'll share that with you right now. NCLH, okay? And Tesla number 2 and Boeing number 3 in terms of being able to go out there and create something, all right? Sell something that has a better than 90% probability of success, and it has really, really nice reward to risk ratios on what you're getting paid to put yourself in a position to make money, all right? I see one of my members. I'm right here. Boston Mindy. Is it Boston Mindy or is it Boston's Mindy? I see that change every once in a while. I'm a crypto member. Rocket looks good. Rocket looks fantastic. Rocket Wealth, I can tell you right now, this particular track record, okay? This particular track record, and we've been doing this. This is not something we just launched a couple months ago, guys. This isn't something we launched a year ago. We've had this out now. This is the best track record. The absolute best track record in the Money Map Press community, in the Money Map Press franchise of memberships. Number one, numero uno, right there. And I can dare anybody out there to find something better, because you won't. Okay? You want to be part of the Rocket Wealth community? Well, there you go. Perrin just threw it up there for you guys. Rocket Wealth, it's at the top of the screen. It's also in the chat box. And hey, you know what? It's 10:30. That means I'm done for the day. I'm done for the week. But I'll see you guys all back here bright and early Monday morning. In fact, I'll be part of Monday Morning Live. For those of you that are on my YouTube channel, thank you very much. You know what you need to do. Those of you here on Monday Morning Live, Chris Johnson is up next. I'll see you next week. Bye, everybody.